if we think a little bit about reward-based crowdfunding versus equity-based crowdfunding, for the reward-based crowdfunding, you basically pre-buy a product. So your exit from that investment is you receive the product. If we think a little bit about equity crowdfunding, what's the exit mechanism? There seems to be frictionless investing, or a move towards frictionless investing on the front end, but how does the exit strategy work?
So there's really three main opportunities for individuals to exit when they're investing in private equity. The first one is if the company does end up going public, there's an opportunity for a secondary market for them to liquidate their shares. The second opportunity is when a company chooses to either have a private trade or sale. And the third one is, the company is generating significant cash flow, and although it isn't an exit, there's an opportunity for a dividend or some sort of return on that investment. The other thing too is that right now we're only talking about equity crowdfunding, but one of the great things about the crowdfunding space in general is that it's really more crowd financing. So there can be debt or equity, there can be hybrids, there can be partnership units. And so the way that the companies choose to structure what type of investment vehicle and how, or what type of security that investor is receiving really depends on the return or what the financial interest is of that investor.
So Sean, you talked a little bit about non-accredited investors being able to participate in crowdfunding, as well as accredited investors. Thinking about specifically non-accredited investors, they've typically been more limited to highly regulated public markets. Now there's another avenue for them to be able to invest in different types of companies, certainly with different risk profiles. Is there a specific type of non-accredited investor, thinking about them as an investor group, a particular type of non-accredited investor that gets attracted to crowdfunding?
Yeah, I think it's, equity crowdfunding is for everyone. So the opportunity now that the retail investor can come in and support the companies that they believe in, or really get behind a movement that they want to see succeed, those are really the key people who will be driving the retail investors or the crowd that will be pushing these early stage companies through, or even later stage companies that they want to see get to the next level.
So as we think about the impact that crowdfunding is having on the economy, and particularly thinking about entrepreneurs and the startups, do you think that crowdfunding is helping to spur innovation?
Definitely. Crowdfunding it's a really important concept that people understand, because it's no longer becoming an alternative financing source. So many startup companies look towards reward-based crowdfunding to get their initial idea off the ground. And then as they grow and continue to gain momentum, now what you're seeing is they're looking for that second stage of financing, and that's really where the equity crowdfunding comes in. So as we see a greater pool of investors coming in to support and inject that capital into the ecosystem, now you're just going to start to see more innovation and creativity and different technologies that are coming out of it to support and spur on the economy.